Hello all, I'm Padma. I'm here to talk to you about the importance of savings. Specifically for you all who are 18, 19 and coming out of your parents' tax return and going to file your own tax return from the tax point of view. So, motivation, setting goals and effective methods are the three important and essential elements for potential savings. Okay, financial planning is very important, and how you prepare now will determine your future. You need the right plan to achieve your goal. With all these in mind, the basic value of retirement savings will be a worry-free retired life. That's what I would say. So if you invest $10 a week, I think every one of you can afford to do that at the age of 20, and so your annual savings, that's in your savings account, is going to be only $520. But for that, for 40 years, that is your retirement age is at 60, so if you save that for 40 years, your savings is going to be only $21,000. But that money, if it gives you the 10% return and it accumulates a compound interest, okay, you get $279,500. Can you believe that?
What is compound interest?
Compound interest, say for example, your annual income, your annual savings is $520 for this year, and you put that money for 20 years savings. So every year you get 10% interest. So that $520 at the end of the year becomes 520 plus 52, so $572. So that $572 at the end of second year is going to give you another $52 added to this. So that's called compound interest. That's the most beneficial way of savings, and the 401k plan that is offered by private companies is giving you that. So that's the most essential part for you all to enroll in the 401k plan. The sooner the better, because you don't have to wait for a long period of life to enroll in that. If you do that, then your per month savings is going to be higher if you want a higher return. So that's the main point. So on the other hand, when you do the contribution to the 401k plan, you don't have to pay taxes on that now during your contribution time, which gives you a lot more savings. Okay, so I'm going to just tell you, give you two calculations on that. Okay. So this is at 1040. This is the form you will be filing. On that, if you see your annual income, if it is at $20,000, and this is going to be your annual gross income, and this is...
Can you move it down a little bit, Padma, into the, yeah, there we go.
Okay. And this is your standard deduction, and this is your personal exemption. So if you take these two, this is going to be your taxable income for the year. Okay. On that, this is your tax liability for the year. So if you made $20,000 this year, and your tax is going to be 1024, okay? Whereas, if you have saved $1,000 or if you have contributed $1,000 to your 401k plan, then your total income is going to be only 19,000, okay? On that,
1 minute warning.
after taking your standard deduction and personal exemption, this is going to be your taxable income and this is going to be your tax liability. So if you compare this with the 1024, you already saved $200 in it. So with $1,000 savings, 200 is additional savings right now. On top of it, government is giving you a retirement savings contribution credit, which is 50% on the first year of contribution. When you enroll this year, you get 50%. That's $500 savings. So on that 885, you will be taking out this $500. So your net tax payable is only $385. So you save a lot when you contribute in your 401k plan. So to conclude this, I would say small sacrifices today will result in huge retirement savings. It's never too late to savings for your retirement. That's what I would say.
All right.